ForexDayBreak podcast.
Good morning and welcome to episode 98. Forex pairs in this episode are EURUSD. We have reversed our course. Trade to the upside has been issued. Euro Canadian dollar. We see an upside potential and a trade has been issued here as well. And Euro Australian dollar. There's potential for a good trade to the upside. It is recommended that you will learn to read the market yourself and not just blindly enter trades based on my signals or from any other signal provider. I will not take responsibility from your trading losses or credit from your profits. Okay, that said, let's start this episode. Okay, hello and welcome to the show. So yesterday was a very bad trading day for us. We made losses. Our analysis was not correct. In all of the pairs that we traded yesterday, we got losses and the result was, well, not that lot of losses. We had quite conservative stop losses, but still not a good day. And sometimes it can be hard to get on board on trading when you have bad days, but this is part of the trading. You need to get used to losses. They will occur almost every week, I would say. And they are big part of and very important part of trading. So yesterday, bad day, but we need to get on board, clear our heads and admit that the analysis was not correct, make a new analysis and try to get a hold of the market situation. So now, if we take a look at this is EURUSD for our chart. So the expectation yesterday was that the triangle is already completed, the fourth wave triangle, but the strong move upside yesterday proved that this was not correct. Now I have made a new analysis and this is proposing the new analysis that the triangle is still forming. We have formed A, B, C and D legs of the triangle and now can expect one more leg to the upside and we are trying to trade this leg higher. We have a trade here actually running already. The original trade was EURUSD buy stop at 108.175. I have slightly different levels here. My trade is running, but you can enter EURUSD buy stop at 108.175, stop loss 1074, take profit 109. The take profit level might be maybe a little bit too high. Let's see how this develops. There is of course tomorrow the non-farm payroll release, and according to this analysis right now, if we move towards the 109 level today, then there can be a positive non-farm payroll. But if we get more or less sideways price action today, then this analysis would propose that we have a negative non-farm payroll or a negative for the dollar. But let's not get ahead of ourselves. Let's see today first. We have a trade here. The expectation is more euro strength, more upside on EURUSD and a move towards 109, perhaps a little bit higher than that. The upper part of the trend line, the triangle trend line, is closer to 109.5 than 109, but of course once we see some price action today we can then adjust our take profit level and of course stop loss level as well if this analysis is correct. We have a quite wide stop loss at the moment. I have had a little bit problems of my stop losses being too tight and this causes usually that even if the analysis is correct, there is not enough room for the price action and then we might get stopped out even if the direction of the trade would be eventually correct. So maybe a little bit wider stop losses. Of course, this is a two-edged sword. If the analysis is incorrect, then there's of course possibility of larger losses. But now this is the trade in EURUSD. So buy stop 108, 175, stop loss 1074, take profit 109. The expectation is that we get one more leg of triangle to the upside towards 109 level. We can actually draw it here what is the expectation. So WXY correction is the expectation for the minute wave 4. So it began on the low of 1052, first W, then 3 wave X, and now very complex and large Y wave triangle. And now the expectation is that we move towards the upper part of the trend line, 109, 109.5, around those levels, and then we can start the next impulsive wave down, minute wave 5, which was expected to begin already, but now the recent price action, the recent sharp move upwards proved that this was not the case. We cannot get a 5-wave structure out of this previous decline. So from the C wave in this chart, this is not a 5-wave structure. If we draw it here again, so you can see it's a clear 3-wave structure, and this of course supports the view that we need one more leg of this triangle to form to the upside. All right, we have a couple of other trades. Euro Canadian dollar 152.6, a buy stop loss 152.15, take profit 153.6. I need to correct this in my signals group. There's a typo, so I will post this immediately, like so. So Euro Canadian dollar buy stop 152.6, stop loss 152.15, take profit 153.6, and the expectation here is that we are forming the C leg of ABC structure within a larger triangle. So we can move on a daily chart to see. So the upper part of this large triangle, the trend line is around 155.5, and the expectation is that we need to move towards that upper level in order to complete this B leg of the larger triangle. So my labeling is a little bit off, but the upper part of the triangle trend line goes near 155.5, and the expectation is that we get a move towards 155 or 155.5. So we can then trade this. If we move back to the 4-hour chart, we can trade this move or part of this move. And quite strong signal for this view is that the recent decline from the A-wave peak 153.19 down to B low 149.475 is corrective. So this structure is corrective looking. If we draw it here, it's very choppy. Maybe we see AB C structure here. It is quite hard actually to label, but a little bit downward slanting sideways, a flat corrective structure, and now we can expect an upside move out of this pair. If we take a look at this in 1-hour chart, we can see quite clear channel has formed here, and now once we break from this channel to the upside, we can then start to make probably new highs on this. We can see also here a resistance level which connects the last two peaks, and we are just at this resistance point right now. So quite crucial point, this 152.5 level. And once we break through that and get to see a little bit more upside, we can move our stop loss near this level, since this looks like quite strong level. The channel and the resistance line both overlap in this point, so once we see a breakthrough out of this level, then I think we can expect more upside on this pair. All right, let's move on to Euro Aussie dollar. We have also a trade here. A little bit similar structure than in Euro Canadian dollar. There's an ABC structure forming here. We can see waves 1 and 2 out of this C wave. And I have my Fibonacci expansion tool here. So we can see, if we take a little bit down, we can see the 100% line Fibonacci expansion level at 158.73. But I don't think this is going to go so far. I think maybe 157.9, 158 level, or 157.8, 157.9 level would be the most that can be expected. There's a strong resistance level around those levels. Our trade here is much more conservative. So a buy stop at 153.75, stop loss 153.16, take profit 155.55. So we have a more conservative trade here, just a little bit above the 61.8% Fibonacci expansion is our take profit level. So yesterday we saw a quite strong move in this pair, and my expectation is that we get a 5-wave structure out of this last leg of the correction. We can draw it here. So waves 1 and 2 have been completed, and now we are forming the third wave, and we need to get 5 waves out of this. So perhaps 158 near there would be 157.9, 157.8, like I said before, would be the ultimate target for this move. And after that, we can expect the larger impulsive structure to continue the downside. So if we have the nerves, if this looks nice impulsive structure, we can of course maybe stretch this trade further. But now the take profit level is quite conservative at 155.55. Okay, that's it for today. Show notes at ForexDayBreak.com/98. See you tomorrow.
ForexDayBreak.com.